Casinos win with only a 2.7% edge. You probably have a better edge. So why are they profitable and you're not? Your strategy isn't the problem. Your backtests look great. Your setup is solid, but you're still losing money. Why? Because every single time you sit down to trade, you're bringing the most dangerous variable into your system. You and your emotions. Your emotions will do everything they can to sabotage your trading by making you rationalize making stupid decisions, chasing trades, moving stops, sizing up, skipping setups, and forcing trades out of boredom. So, how do you stop yourself from sabotaging yourself? Simple. Adopting a rules-based mechanical system is the only way to fight back. So, what is a rules-based mechanical system? It's exactly what it sounds like, a completely defined set of rules that tells you when to enter, where to place your stop, where to take profit, and how to manage the trade. There's no interpretation, there's no discretion, there's no gut feeling. Every decision is predetermined before you even look at a chart. If conditions A, B, and C are met, you take the trade. If not, you don't. Your stop goes here. Your target goes there. Period. This might sound robotic. It might sound like you're removing the art from trading. And you know what? You absolutely are. Because the art of trading, that discretionary element, that's just another word for emotion sneaking into your process. Why do mechanical systems work? Let me be clear. I'm not saying mechanical systems win every trade. I'm not saying they have a 100% win rate. No system does. What I'm saying is that mechanical systems remove the single biggest cause of failure: you. Here's the power of a mechanical system: consistency. With a mechanical system, every trade is treated the same way. There are no special circumstances. There's no "this time is different." You execute the same way every single time. This consistency is what allows your edge to play out over time. Think about casinos. The house edge in roulette is only 2.7%. That's tiny. But casinos make millions because they execute that edge consistently over thousands of spins. They don't get emotional. They don't change their rules. They let probability work in their favor. Your mechanical system does the same thing. Emotional detachment. When you're following mechanical rules, you're not making decisions in the heat of the moment. The decision was made when you were calm and rational, when you developed and tested your system. Now you're just executing. This removes the emotional charge from trading. You're in a losing trade? Doesn't matter. Your system says the stop is here, so that's where it is. You don't have to wrestle with the decision. You don't have to feel the fear and fight through it. The decision is already made. Accountability and improvement. With a mechanical system, you can actually measure your performance accurately. You know whether you're losing because your system has no edge or because you're not following your system. You can look at your trading journal and say, I followed my rules on these 15 trades. What was the result? If you followed the rules and lost money, maybe the system needs adjustment. If you broke the rules, that's a discipline issue. Without mechanical rules, you can't do this analysis. Every trade is different. Every decision was based on feel. You have no idea what's working and what isn't. Removes decision fatigue. Trading is mentally exhausting when every decision is discretionary. Should I take this trade? Should I move my stop? Should I take profit here? Every question burns mental energy and creates an opportunity for emotional interference. With a mechanical system, most of those decisions are eliminated. Your brain isn't constantly wrestling with choices. You show up, execute your system, and that's it. This preservation of mental energy is huge for maintaining discipline throughout a session or week. The components of a solid mechanical system. So, what does a real mechanical system look like? Let me break down the essential components. Entry rules. These need to be completely objective, not enter when momentum looks strong. That's subjective. Instead, enter when the 20-period EMA crosses above the 50-period EMA, the RSI is above 50, and price makes a higher high above the previous day's high. That's objective. Anyone looking at the chart sees the same signal. Stop-loss placement, no discretion. Your system defines exactly where the stop goes. Maybe it's below the swing low. Maybe it's a multiple of ATR. Maybe it's a fixed dollar amount. Whatever it is, it's defined before you enter. Position sizing. How much are you risking per trade? This isn't a feeling. This is math. Most professional traders risk between 0.5% and 2% of their account per trade. Your mechanical system defines this precisely. Profit targets. Where do you take profit? Is it a fixed risk-reward ratio? A multiple of your stop distance? A technical level? Whatever it is, it's predetermined. No watching the trade and feeling out when to exit. Trade management rules. Does your system use a trailing stop? Do you scale out at different levels? Do you move to break even at a certain point? All of this is defined in advance. Trade frequency. How many trades does your system generate? Is it a day trading system that might trigger multiple times per session, or a swing system that might generate one trade per week? Understanding this helps you avoid forcing trades outside your system. Filters and conditions. Does your system only trade during certain market conditions? Maybe you only trade during trending markets. Maybe you avoid trading during major news events. These filters are defined clearly. The testing phase. Here's what separates a real mechanical system from just a random set of rules. Testing. Before you risk a single dollar on a mechanical system, you need to know if it has an edge. This means backtesting. Go back through historical data and apply your rules. Every rule. No cherry picking. No, I would have done this differently. Just the rules. What's your win rate? What's your average winner versus your average loser? What's your maximum drawdown? How many consecutive losses did the system experience? These metrics tell you if your system has a genuine edge or if you're about to donate money to the market. And here's the thing. Most traders skip this step. They come up with some rules, they think they make sense, and they start trading real money. Then they're shocked when they lose. The market doesn't care about what makes sense to you. It only cares about what actually works. A properly tested mechanical system removes the guesswork. You know your expected performance. You know your system takes losses. You've seen it survive drawdowns in historical data. This knowledge builds the confidence you need to follow the system when it's challenging. The psychological battle. Here's the part nobody warns you about. Creating a mechanical system is the easy part. Following it is brutally difficult. Why? Because even with rules, your emotions don't disappear. You still feel the fear. You still feel the greed. You still experience the urge to override the system. The difference is now you're aware of it, and you have something concrete to hold on to when those emotions surge. Let me give you a personal example. Early in my trading, I developed a mechanical system for swing trading breakouts. I tested it thoroughly. Over 200 trades in backtests. It had a win rate of about 55%, but the average winner was 2 times the average loser. Solid positive expectancy. I started trading it live. The first 3 trades were losers. Now, I knew from my testing that losing streaks of 5 or 6 trades were normal for this system. I knew this intellectually, but emotionally, I was convinced the system didn't work. I was convinced I'd made a mistake. Every fiber of my being wanted to start adjusting the rules, but I didn't. I stuck with it. Trade 4 was a winner. Trade 5 was a winner that ran for 3 times my risk. By trade 20, I was profitable. By trade 50, the results were tracking almost exactly to my backtest. The system worked, but only because I forced myself to follow it through the emotional discomfort. The common pitfalls. Even when traders commit to a mechanical system, they fall into predictable traps. The exception trap. The system says to take this trade, but this situation feels different. Just this once, I'll skip it. Or the reverse. The system says to skip this trade, but it looks so good. Just this once, I'll take it. Every exception you make destroys the integrity of your system. You're not trading your tested system anymore. You're trading your emotions with a thin veneer of system trading. And the worst part? Sometimes the exception works out, which reinforces the behavior. But over time, exceptions kill your edge. The system hop-and trap. Your system hits a drawdown. It takes 3 losses in a row. Instead of recognizing this as normal variance, you abandon the system. You go searching for a new one. You find another system, start trading it, and it immediately takes losses because you're jumping in at the worst time. So, you abandon that one, too. You're perpetually searching for the perfect system that never experiences drawdowns. That system doesn't exist. The paradox of constraints. Here's something beautiful that happens when you fully commit to a mechanical system. The constraints actually give you freedom. I know that sounds paradoxical. How can having strict rules give you freedom? But think about it. When you're trading discretionarily based on emotion and gut feel, you're a slave to your impulses. You're constantly second-guessing. You're constantly stressed. Every decision is a burden. Every trade is emotionally draining. When you have a mechanical system, you're free from that burden. The decision is made. You don't have to figure out what to do. You just execute. There's a lightness to it, a simplicity. You stop watching every tick with anxiety because you know your stop is in place and you trust your system. You stop agonizing over whether to take a trade because your rules tell you objectively. You stop losing sleep over whether you made the right call because you followed your process. The constraints of the system create freedom from emotional turmoil. Trading becomes boring. And that's perfect. When you're consistently following a mechanical system, trading becomes almost boring. You're not on an emotional roller coaster. You're not having these massive adrenaline-fueled sessions. You show up, you check if your conditions are met, you execute if they are, and you go on with your day. For people addicted to the excitement of trading, this sounds terrible. But if you're addicted to the excitement, you're gambling, not trading. Professional trading is supposed to be boring. It's a business. You execute your process, manage your risk, and let probability work over time. The traders who are constantly excited, constantly stimulated, constantly on an emotional high or low, those are the traders who blow up their accounts. Sustainable profitability comes from the boring consistency of executing a proven system over and over and over, reclaiming your life. Here's another benefit nobody talks about. When you have a mechanical system, trading doesn't consume your entire life. Discretionary traders are constantly glued to their screens. They're always watching, always analyzing, always looking for the next opportunity, always worried they'll miss something. It's exhausting, and it bleeds into every other area of life. With a mechanical system, especially one designed for your lifestyle, you can actually have a life outside of trading. Maybe your system only requires you to check charts once a day. Maybe it's a swing system where you set up trades on Sunday and let them run all week. Maybe it's a day trading system with a defined session time, and once that session is over, you're done. The system gives you boundaries. You know when you need to be engaged and when you can completely disconnect. This balance is crucial for long-term sustainability in trading. Burnout is real, and it destroys more trading careers than most people realize. So, how do you actually follow your mechanical system when every emotion is screaming at you to do something else? Start small. When you first begin trading a mechanical system, trade the smallest size possible. Even if you have a large account, trade micro lots, 1 contract, or 10 shares. The goal isn't to make money. The goal is to build the psychological habit of following the system. Once you can follow the rules consistently with small size, then you can gradually increase. Journal everything. Keep a detailed journal of every trade. Did you follow your rules completely? If not, what rule did you break and why? What emotion were you feeling? Over time, you'll see patterns in when and why you deviate from your system. This awareness is the first step to controlling it. Focus on process over outcome. This is huge. Judge yourself not on whether individual trades win or lose, but on whether you followed your process. A winning trade where you broke your rules is a failure. A losing trade where you perfectly executed your system is a success. This mindset shift is critical. Embrace probability. Your system is a probability game. If your system has a 60% win rate, that means 40% of the time you're supposed to lose. 4 losses out of 10 is not failure. It's expected. When you truly internalize this, individual losses stop feeling personal. Automate what you can. Use pending orders instead of market orders when possible. Set your stop loss and take profit orders immediately when you enter. Use alerts to tell you when your setup conditions are met. The more you can automate, the less opportunity there is for emotions to interfere. Take breaks after losses. If your system triggers a trade and it loses, take a break before looking for the next one. Go for a walk. Get a coffee. Let the emotional charge dissipate. This prevents revenge trading and keeps you thinking clearly. The long game. Here's what separates profitable traders from everyone else. Time horizon. Losing traders think in terms of individual trades. They need this trade to win. They need today to be green. They need this week to be profitable. Winning traders think in terms of hundreds of trades. They know their system's edge plays out over time. They know that this week might be red. This month might even be red. But over 100 trades, over a year, the edge manifests. When you adopt a mechanical system, you're committing to that long-term view. You're saying, I trust that if I execute these rules consistently, probability will work in my favor. It requires patience. It requires discipline. It requires letting go of the need for immediate gratification. But that's the price of consistency. And consistency is the only path to sustainable profitability. The bottom line. Let me bring this all together. Your emotions are not your friend when it comes to trading. Fear, greed, hope, revenge, euphoria. These emotions are survival mechanisms that served your ancestors well, but they're actively working against you in the markets. You cannot eliminate these emotions. You're human. But you can build a system that works around them. A rules-based mechanical system removes the emotional decision-making from trading. It gives you objective criteria for every action. It allows your edge to play out over time through consistent execution. Yes, building a system takes work. Testing it takes time. Following it takes discipline. But compare that effort to the alternative. Continuing to let your emotions sabotage your trading. Continuing to experience that cycle of hope and disappointment. Continuing to lose money because you can't execute consistently. The mechanical system path is harder in the short term, but infinitely easier in the long term. The emotional trading path is easier in the short term, but devastating in the long term. Your next steps. If you're ready to make this change, here's what you need to do. First, define your system. Write down every rule. Make them objective. Test them thoroughly on historical data. Don't risk real money until you've proven the system has an edge. Second, start trading it with the smallest size possible. Build a habit of following your rules before you scale up. Third, journal every trade. Track your execution. Identify when and why you deviate from your system. Fourth, give it time. Your system needs at least 50 to 100 trades before you can judge its real-world performance. Commit to that sample size. And fifth, be patient with yourself. Building the discipline to follow a mechanical system is a skill. You'll make mistakes. You'll break rules. That's part of the learning process. What matters is that you keep coming back to the system. Keep reinforcing the habit. Keep choosing process over emotion, the real competition. Here's the final thought I want to leave you with. In trading, you're not really competing against other traders. You're not competing against the market. You're competing against yourself, against your emotions, against your impulses, against your need for excitement and immediate gratification. The market will always be there offering opportunities. The question is, will you be disciplined enough to take only the opportunities that fit your system? Will you be patient enough to wait for your setups? Will you be strong enough to follow your rules when every emotion is screaming at you to do something else? That's the real battle.